We still believe the S&P 500 is tracing out a small to intermediate term top, and despite the possibility of a short-term pop in prices, we would remain cautious. This is Mark Arbiter with S&P's Chart Room. Taking a look at a daily chart of the S&P 500, like we have pointed out with many charts recently, looks like the S&P 500 is tracing out a head and shoulders top. The left shoulder situated over here occurred mostly in March. It almost took about a month. Then we had the head, which was very quick, and it's very possible now that we will move sideways to higher as we trace out the right shoulder. How high is a difficult question. We think we could get back, if we go back to the top of the left shoulder, 1560, 1570 area would be it. As far as, predicting the time, we have noticed that at times the right side of formations, whether they're bottoms or tops, are sometimes quicker than the left side, but we'll just have to wait and see. So despite the potential for a move up to 1560, 70 or even a little higher, we would remain cautious here because at the recent lows, we think that was about half the size of the potential pullback for the 500. The key area or line of death here for the S&P 500 is at 1539 to 1540 area. We have held there 1, 2, 3 different times. We also, and so besides this chart support, we also have the 50-day exponential that came in right at that area. And then we have this trend line off the lows since November. And in addition, we had the first important Fibonacci retracement level of 23.6%. And that's a retracement off the lows to the highs, or the lows from November up to the highs here in April. So we think this will probably be another couple weeks. As far as downside is concerned, if you take the size of this formation and then subtract it from the breakdown point, which is around the 1540 level, that brings us to the 1470, 1480 level. Interesting, there's actually two Fibonacci retracements in that area. A 50% retracement of this November rally comes in around the 1475 level, and a 38.2% retracement of the rally since early June of last year up to this recent high also targets that 1475 level. At the same time, the 200-day exponential moving average, which is still rising, might be in that 1470, 1480 level in a couple weeks, so that will also represent support. And in addition, that 1475, 1470 area was the top of this topping formation that we saw last year. So once this right shoulder plays out, we could see a pretty quick drop down to that 1470, 1480 area, and then we'll wait for some kind of reversal formation, double bottom, inverse head and shoulders to say the all clear. And after the bottom is in, we think prices will start to head back up over the 1600 level and potentially up into the 1700 sometime next year. So if we do get this pullback here, this might be one of the last great buying opportunities of the move that has started last year, and this move off the November lows as we move further into this year and into next year. This has been Mark Arbiter with S&P's Chart Room.